All right, how to grow a small account with the Miami Vice theme colors behind me and the muscle shirt that makes me look like I'm from GTA. Right, before we go on a mission and beat up some bruisers or something, let's break this down. You got a small account. There's a couple different things you're going to want to do differently than with your large account here. This is my advice. In theory, let's say you start with like $100, okay? The first thing you're going to have to make sure is you really don't have much drawdown to work with. When I'm trading and I have $1 million account here, you can follow the extremes if you want to see me trade on $1 million account. I'm able to add to the trade a little bit as I go into a drawdown zone. I have a zone I usually enter in on, and I'm allowed to add a little bit more and more and more. Basically, with a $100 account, you get one entry, you have to use the minimums, and you can't really go into much drawdown. So you have to be following the trend. When you're following the trend, you're gonna be looking for areas that the price comes back into a zone that you'd be looking to buy in on a pullback, and then wait for the reaction off of that, and then hopefully use the momentum to catapult you into larger profits. You're gonna have to be going for really all Hail Mary bets here, which is the second major thing, is you want to basically risk the entire account every single time, because if you got $100, you can easily get another $100 from your next paycheck, and you're trying to snowball that account very quickly to something that's actually going to take more time to accumulate through earnings from your job. And then number 3, and by the way, we're going to jump into the chart here so that I can show you exactly how you would do this. Number 3, you're going to look for really low R, and that might be kind of counterintuitive, that you might want to be looking for large R or really large distance profits, because that way you can snowball that account like I just said. But what you need to do is make sure you lock in profits over and over and over, and then use those profits to then snowball even further. When you're shooting for lower targets like sub 2R, you're going to have a much higher likelihood of you hitting those trades. You get in, you get out, you take your money, and then you move on to the next trade that you're then full margin again. Let's look at what this would look like in the chart, for example. So let's say you are trying to follow a downtrend, right? What you want to be looking for is, we are in a downtrend. You don't necessarily need to have any specific strategy for determining the downtrend, but as you see new levels break below, you're going to wait for these pullbacks, and you want to make sure that there's a decent reaction. You can drop the time frame if you want to, and you want to be entering on those reactions off those levels so that you can then snowball that further, right? So after you see a reaction off of this level, supposedly off of this level here, let's say you get in not the perfect entry or whatever, you're going to put sort of your stop. You can use a loose stop too, but the reality is there is no stop. There's no stop loss when you're trying to snowball here, because you're either going to blow your account completely or you're going to be making profit. And then what you're going to do is basically just shooting for new highs or lows, and something along these lines. That's going to be a general sort of idea. You're going to full margin. You're going to bet absolutely everything that you can, and then hopefully it goes into your momentum very quickly, and then you get out of the trade once you can safely. Okay. So again, let's break this down. First, you're going to determine a trend, right? So I'm going to scroll. Just let's say we'll just pick gold, for example. Here, we're going to go to the current model in gold. Okay. This looks like a pretty good uptrend. You're making new highs, and this might be an area of resistance, but who cares, right? What we want to do is just scalp more profits, and then we're going to get that small account to be larger, and you're just looking for little scalps while you're doing this, and you're going to get a few wins in a row, and that's going to blow your account up to something larger. So all you're going to look these large candles, and then a quick pullback, you're going to buy in on them and then shoot for new highs, right? So here's maybe an example. Back is, say, hey, we're in this uptrend, we see a large candle, you look for a quick pullback off of a level, right? You might not have gotten in, but once we see a reaction off that, maybe you take that candle here as it pulls back, you see the reaction, and then you look for the new high, right? So this might have been a trade. And this is your easiest, most probable way to win trades. And then all you do is you just shoot for something like 2R sort of thing, right? Maximum of 2R, and you have a really likelihood trade here. For example, let's see again, as you're following a trend, maybe this is a downtrend now we've determined. We see, okay, there's a large candle here. We see the pullback. We look for that close, and then you continue down, right? So we can say, hey, here's another example, right? And then we're going to roughly have our account being blown here, right? And after you see a reaction off of these levels, right? You see that wick, then you can again shoot for a new level with 1.3R or so, and then close it out once you're in profit. It's as simple as that. That's the easiest way that you can. You're going to do that like 5-10 times in a row, and know that's going to take multiple times for you to do it, because you are going to blow it eventually, and then you will be able to flip that $100 account to, $5 grand, $6 grand, something like that. And then you can start trading with lower risk and doing something more reasonable.